51 years ago, this past Monday, an action was taken that it's impacted every single American since. Now, the newsworthiness of it was lost to a whole lot of other events, including Henry Kissinger's historic trip to China, which paved the way for Nixon's visit in 1972. But I got to tell you, make no mistake, when these words were uttered by President Nixon, the impact was profound.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
Soon after the U.S. gold standard era ended on August 15, 1971, someone asked a 31-year-old economist named Art Laffer what he thought the outcome would be. He said, "It won't be as much fun to be an American anymore." And Art joins us now. All right, Art. Well, since then, the U.S. dollar's lost 77% of its purchasing power against the Swiss franc, but there have been other more profound impacts, haven't there?
There have been a lot more profound. If you'll remember, Charles, the dollar was $35 an ounce back then. What's the price of gold today? $17.50, something like that, $17.80. I mean, that's a fairly sharp appreciation. At that time, I disliked doing that very much. By the way, Paul Volcker and I were the two standouts back then who really did not want to take the U.S. off the gold standard. But if you look at it, that's when the whole inflation thing started in the U.S. All the problems that we are facing coming in with Reagan were built up right then and there.
What was amazing is as you listen to more of that Nixon speech, the promises he was making as a result of taking us off the gold standard all backfired immediately, right? We had runaway inflation, we had stagflation, we had all kinds of issues. It reminds me of some of the things we heard from politicians this week. You know, of course, another thing that was intriguing, it was temporary. It was a temporary suspension. In fact, I think you actually went back, you created a bill to try to restore the gold standard. It was introduced by Senator Jesse Helms. Is it too late now? I mean, could we ever go back at this late stage?
You know, you can always go back. You can always do the right thing back then. You can do it like Britain did in the 19th century, which is really have very few gold reserves, but just maintain the stability of the value of gold by intervening in the dollar market, just doing what the Fed does, only now trying to stabilize the price of gold. You can do that with a whole bundle of commodities. There are all sorts of ways you can stabilize the value of the dollar, and that's what we should do. We should go back to some sort of stabilization of the dollar. We wouldn't have the problems we're having right today, Charles.
I want to bring up Henry Kissinger because when he did make that trip to China, their per capita income was $119. $119 per person. We were at $5,600 a year. Now we're at 69,000. They're at 12,000. But if you look at the percentage increase, they're almost 11,000%. That relationship, has it been better for us or for China since then?
Well, let me just say that I was on the first trip to China. I was with George Shultz and John Ehrlichman in Air Force Two in October of 1970. We did the pre-Kissinger trip, which was the pre-Nixon trip. So I was perfectly willing to hate China back then. I just, and then I just fell in love with China. And if you look at what China has done, it's done an amazing job of bringing its country into prosperity. I mean, I don't know how many fold they've increased real GDP per capita, 66-fold. They went from taxes, what was 94% of all products in China in 1970 went through state-run enterprises. Today it's 8%. China pegged the dollar pegged the yuan to the U.S. dollar in 92.
There's no doubt it's worked out great for them, Art.
They did a great job.
But what about for us, right? This earnings season, what really is surprising to me is outside of inflation, the biggest topic by far is onshoring or reshoring. We're hearing a lot of folks say they want to get that done. Is it even possible? Can we start to bring back some of that prosperity back to America?
You don't bring that prosperity back with tariffs, by the way, Charles. You bring it with free trade. You don't want onshoring of products. You really don't. There's some things we make better than foreigners. There's some things foreigners make better than we do. We and they would be foolish in the extreme if we didn't sell them those products we make better than they do in exchange for those products they make better. It's win-win.
I'm out of time, but are we conflating them making something better than us than making something cheaper than us? Sometimes they make things inferior, but so much cheaper. We say, okay, we'll take that screw for 50 cents instead of the $2 screw, but then when the wing falls off something, we wonder what went wrong. I mean, are we giving away too much for this? Is that the comparative advantage that they have slave labor, and so therefore they can make something cheaper? Is cheaper better?
Well, cheaper isn't always better, as you know, but cheaper sometimes is better. You know, if McDonald's drops its hamburger price, it's cheaper, and it's still the same hamburger, Charles. So if you can get something cheaper that's just as good, or something's better that's the same price, you're better off. And foreigners do a good job sometimes in doing that, Charles, and sometimes we do. And we should trade with them, not protect ourselves from them.
All right, Art. Hey, you're one of my favorites. I love these discussions. Got to bring you on more often.
You are me too, Charles.
In the meantime, now, I got to tell folks about your newest book because it's available for pre-order and you want to order this. It's called Taxes and Consequences. Art, talk to you again real soon. All right, I want to stick with this because there was a headline on the 50th anniversary a year ago that getting off the gold standard actually led to the rise of cryptocurrency back in 1971. So it's an interesting concept. I want to bring in the host of Coin Stories podcast, Natalie Brunell. Natalie, you know, the rest of the headline goes on to read, the decision has led to volatile financial markets, geopolitical tensions, and inflated prices. Is there a connection between that and the rise of cryptocurrency?
Oh, absolutely, Charles. So good to see you. Yeah, Bitcoiners talk about that event a lot because ever since then, our money is essentially now backed by debt and the threat of violence. So when the U.S. essentially defaulted through Nixon's closing of the gold window, it really opened up the door for this endless money printing and this official move to creditism over capitalism, constant monetary and fiscal intervention, which, by the way, is a very tempting illusion, right? Because it can create this rapid growth and wealth in the immediate term. It's like a drug addict getting high. But once that high starts to wear off, the withdrawal sets in, you need more drugs to get that same high. And in the case of our government, we never wean off the stimulation, the low interest rates. We constantly pump up even bigger bubbles, and it leads to more wealth concentration. And unfortunately, we're at that stage of creditism where we can't produce real growth anymore. We can't service our debt and obligations without printing ever more money, going further and further into debt. Right. And that's why we need an alternative system in the long run, and that's Bitcoin.
And in the meantime, the money printing, I think, will continue, to your point. You know, yesterday, the Walmart CEO bragged about the fact that they're going to be able to take more market share because come Thanksgiving, you're going to be able to go to Walmart and be able to buy enough food to feed a family of 4 for less than $50. I mean, that's good, but it's kind of scary that we're talking like that in America, isn't it?
Yeah, you know, Charles, I think you've tweeted about this before. Every generation has this nostalgia for their youth, and this isn't the America that we grew up in. We used to have this strong middle class where people didn't worry about affording retirement or their groceries or putting their kids through school. You could at one point put your money in the bank and actually save with an interest rate. We used to manufacture things like you were mentioning in the last segment, and we didn't just expect handouts or entitlements or loans to be forgiven. In fact, I think we would have been ashamed to ask for the government for that. And now I feel like we just identify ourselves by who we voted for in the last election. And we don't realize that it's really the system at large that needs to be reprogrammed. And we finally have a potential solution through technology, which is Bitcoin, which takes the power of money away from the state and returns it to the people who work and produce and innovate. And Natalie, that's what Bitcoin really means to us. So.
I got 30 seconds. This reset that you're talking about, what role do Americans have in this? In other words, should we also be jolted back to a period where we put more emphasis on hard work and saving a lot of money? Because this conspicuous consumption that we spend no matter what is also playing a big role with inflation and money printing, isn't it?
Absolutely. I think we need to go back to a nation of savers as opposed to consumers and people just going into debt like our government is so good at doing. And I really think that Bitcoin will be as revolutionary to freedom and creating wealth and prosperity as the internet was. And we need to embrace it as such. And this is a good time to dollar cost average.
Natalie, you're absolutely fantastic. You know, and you're I'm a little bit younger than you, but I want to go back to those nostalgic times too.
Me too.
Talk to you again soon.